Ruchir joins us this morning to talk about that piece, chairman of Rockefeller International. Ruchir, great to have you. Thanks for the time today.
Thank you.
You say it is a post-China world. You say their decline could reorder the world. You say that this recent appearance in San Francisco did hint at some moderation. What do you think is going on, and what are they doing about it?
Well, I don't think that they can do much about it. I think that's the real issue, which is that we want to blame Xi and all his policies, and those in part may be hurting China's growth rate. But I think that the issues are much bigger. Just look at their demographics, look at their debt profile, that this is not a country which is going to grow at a rapid pace anytime soon. They, in fact, should have already moved to a much lower growth plane, was it not for the property bubble that they were able to inflate for much of the last decade. And I think that now we're at a stage where they've hit a tipping point. And I suspect that China's share in the global GDP is going to gradually keep declining for the foreseeable future. So this, in a way, is a historic moment, which is that in the 1980s, China's share in the global GDP fell to a low of 2%. And then it rose like no country probably ever has to a high of over 18% by the start of this decade. And last couple of years, it's sliding back down. And I think that that is a huge shift that's taking place, pretty much like what maybe Japan experienced when its share of the global GDP slid from 16 to 5 or 6% now. I don't think it'll be that dramatic for China, but I think that this gradual slide back down has begun.
Yeah, the term Japanification has been used a few times, and we've talked a lot about, as you mentioned, the property debt and unemployment and the collapse in foreign direct investments. There was some discussion last week about why Xi didn't make a more overt attempt to woo businesses when he had those CEOs in front of him. What do you think that's about?
I don't think that in terms of there's only that much that, he can do, because I think that he realizes that this is more of a national issue. This is not about just sort of talking to CEOs and stuff like that, that he's made up in his mind that he needs to decouple from the US. I think that China is quite convinced that this is an era of deglobalization now, where a lot of the Western powers could cut China off the supply chains. They can't do it in a dramatic way, but that's the path. So I don't think he wants to go back to embracing the way China was integrated in the global economy a decade ago. So I think that it's a very realistic stance that he's taking. And in that way, I think that he's being quite realistic, whether it's deglobalization or realizing the perils of too much debt. I think that there's a lot of realism which is behind China's policy here, even though at the surface it appears there's a lot of nationalism and bravado which is out there. But I think that we are in a post-China world now, and for me, it's equally interesting which are the countries that are gaining as China's share in the global GDP is declining. It's the US, and it's a handful of emerging markets which are gaining outside of China: India, Indonesia, Mexico, Poland. And that's a pretty impressive list, I think, which goes unnoticed in this discussion between US and China.
Ruchir, yeah, certainly the relative growers perhaps go unnoticed, but from an investor's point of view, there really almost has been a dismissal of China as a growth story for a while, right? I mean, investor money coming out of there, massive underperformance of Chinese equities, maybe because of the sense that capital's not going to be treated well there. But what is the main takeaway from your perspective for an investor in this shifting dynamic?
Well, I think that it's about the fact that you got to have some exposure to China, just because it's always going to remain a very large economy. So to cut China off is very difficult. But I think that it's all about moving to these other emerging markets outside of China. That's the really big trend for me that's in place. So I think for investors, it pays to still remain a bit engaged with China, because, as you said, things have gotten so beaten down and sentiment is really negative. And even in Japan's case, like in the 90s, you got some pretty violent bear market rallies of up to 50, 80% or so. So you got to be mindful of those rallies. But the broad trend is a diversification away from China to these other emerging markets. We've seen even Japan do well. I think that trend is pretty much now, that trend is on and is likely to run for the foreseeable future.